Hi there, welcome to Kneppy Invest. On March the 6th, 2024, I released a video titled ASX Daily Rundown. And to my surprise, that video was met with a fair bit of enthusiasm by viewers of this channel, and that made me happy because this video and that video needed zero rep. I'm just recording what I do at the end of every single trading day. So if you like this type of video, just leave a comment in the comment section of this video. Put your thumbs up, thumbs down. You like to see more of this type of video, see less. Also, what I'm going to show you today, maybe you'd like to see more of some of the things and less of some of the other things. So I will show you some charts. I'll go through announcements, look at the movers of the day, also look at unusual volume, unless I forget. And that's what I do at the end of every single trading day. I won't show you absolutely everything because I don't want to make this video 1 hour long. I will show you one thing that I don't do, and that is looking at comments that are written on my videos. But maybe I can make this a thing in these videos as well. Go through some of the comments you left in my previous video. So let's go through the 4 comments that were left in my video released on 6th of March. First one, John Taylor. DDR, he sold over a divorce, so maybe he could be too picky on price. Yeah, I did actually see this statement, or this part of the statement, after I recorded the video, that the whole reason Dicker Data, or David Dicker, whatever his name is, sold some shares is because he's going through a divorce settlement. Bad luck, Mr. Dicker. And this actually makes the sell-off in shares on Dicker Data even more perplexing. This is a perfect reason to sell some shares because you have to, probably by law. I might pick up a few more, says John Taylor. And to be honest with you, I can see why. And to be honest with you, again, I bought some shares in Dicker Data today. And I'll talk about my purchase of shares of Dicker Data later in the video. Not a long-term hold, more than likely. More than likely, it's a short-term hold. And I'll talk about my trading strategy with Dicker Data when I talk about it later in the video. AYU, are you selling Droneshield given three directors cashing out half of their holdings? I did not know about this until this particular comment. So this is sometimes why I do like comments, because you tell me stuff I don't know nothing about. And I would not be shocked to see, I have not had a look at Droneshield share price just yet. I would not be surprised to see Droneshield shares sold off massively today. What is massively? What's my definition of massively? More than 10%. This could be a concerning sign when 3 directors sell out on the same day and it's half of their holdings. That is a massive amount of shares, and that can be a signal. Now, maybe there is a legitimate reason why they're selling out of shares. Maybe it's tax reasons. I don't know. But that is or could be a concerning sign and a legitimate reason why you might be selling. I'm not selling my shares just based off this news because more than likely, possibly the market is overreacting. This is sometimes happens when directors and founders sell. That's what I'm hoping with Dicker Data. We have seen this in the past. I showed you, was it Doug Technology yesterday? In that video, share price rebounded fairly quickly. We have seen it with Kogan. Share price rebounded every single time Ruslan Kogan sells shares. The share price falls and then rebounds fairly quickly. Will it happen with Droneshield? Maybe not, because this is a more concerning selling when 3 directors sell at the same time, and it's half of their holdings. Nice says 77 or 27%. No idea what that means. Now, I am afflicted, and I say afflicted casually, with spoonerisms. So, for example, I'll go to Market Index right now. Sometimes I have to catch myself when I look at stock scans. I was going to say it again. I will say Scott stands. That's sort of like a spoonerism. So if you don't know what spoonerism is, just Google it. Google is your friend. So don't be surprised sometimes when I mix up letters of 2 words, like Scott stands. Anyway, let's go back to the comments. So maybe that's happened there. I mix up some words. And it's been like 3 times, including me. Jack Sue 8732. Thanks, Michael. Great work. I did top up some SETI shares when I saw the drop in the morning. Can't wait to see the standalone video. Good luck, Jake Sue. I actually have recorded that standalone video. In fact, I recorded just before I started this video, which is why I'm a little bit late today. I'm going through this process that I go through every single training day. So look out for that video within the next few days. Not sure when I'll release it. Not today because I'm releasing this video. Maybe tomorrow morning or maybe tomorrow afternoon. Who knows? If a lot of comments suggest they don't like this video, maybe this will be the last Kneppy's ASX rundown video. I don't know. Okay, so I'll get rid of that page. So let's go to what I do at the end of trading day every single day. Now, yesterday's video, I went straight to market index, but that's not exactly what I do at the start of every single, well, at the end of, at the start of the process of every end of the trading day. Oh God, I messed that up completely. So typically the first step I do at the end of every single trading day is I just go through the announcements just to see if there's any more interesting announcements being released. And this is a very quiet period on the ASX. Only 70 events, market sensitive events released today. We compare that to when we are in reporting season. So if you look at the amount of events released on the last day of February or January, you're talking about between 400 and 500 events. Today, 70 events. Now, typically before trading has begun for the day, these are not listed by date. Why is that? We want to list this by time. There we go. So before trading has begun for the day, I will look at announcements. Then when trading begins, I go away, do other stuff. So there weren't many interesting announcements that I did see before trading began. A couple of interesting ones. Phoenix Resources. Phoenix completes first shipment from Twin Peaks. I don't think the market would have reacted so well to that. The more interesting announcement was GQG. I had to stop myself from saying QGQ. GQG released funds under management. This is one sort of announcement we are seeing released this time of year. Funds under management by fund managers. We saw one released by Magellan yesterday. The market reacted well to that. How the market reacted to GQG, up 2.75%. And I do remember their funds under management were or increased impressively. So it was a good increase, but probably the market expected a really good increase in funds under management. And I just noticed that Platinum Asset Management released their funds under management at 4:18 p.m. Now, typically, and I am being a little bit cynical here, if a company releases this sort of announcement after closing of trading, it's going to be negative. So let's have a look at it. Is it negative? Is it going to be a big decrease? For some reason, ComSec announcements opens up really clearly. Funds management increased from 15.2 million, was that billion, to 15.6 billion. However, they do say here, right here, Platinum experienced net outflows of approximately 285 million. So why has funds under management increased, but net outflows, or there is, okay, let me say that again. Why has fund under management increased, yet there is a net outflow? And that's more than likely, the reason behind that is more than likely that the funds they do have under management, the value have increased because it was a good month. But overall, if you look at, how's the best way to say this? You know how retail companies have like-for-like sales increase? This is like-for-like increase in funds under management. If there was no change in value of the funds they do have under management, there would have been a net outflow. But the reason why funds under management increased is because this company had a good month. Most people had a good month in February because it was a good month on the ASX or even overseas. So that's why funds under management increased, yet the company experienced a net outflow. I'm pretty sure I have that right. Another interesting announcement, Genesis Minerals released the half-year results. I'll have a look at that later. Actually, let's have a look at that right now. I always have a look at any company that releases the half-year accounts. And this company is a gold-producing company, if I remember correctly. They are profitable, and they do generate revenue. Okay. So what we have a look at here is revenue up 44%, EBITDA down 28%, profit down 37%, net cash at end up 121%. So it'd be interesting to see how the market reacts to Genesis Minerals tomorrow. It could react either way. I don't know. So that's the first thing I usually do is go through the rest of announcements that were released after trading had begun for the day. And I think that's all I'd need to go through. I can't see anything else, but I might have missed some. And that's why I do the next step. And the next step is I go to market index and I look at through a few stock scans. Now, before I do that, it was a good day on the market. ASX 200 up 0.4%, or ordinaries up 0.5%, small ords up 0.9%. So remember, yesterday was a bad day for the small ords and all tech. All tech up 0.75%, resources down 0.3%. Look at the sectors. What sectors had good day? Industrials up 1.3%, IT up 1%, energy down 1.15%. And gold had a good day today, up 1.8%, small ords 0.9%. So a good day on the market today. And based off your ordinaries gold, the gold price is still going higher. Let's have a look. Gold price. Wow, look at gold. I'm going to call it right now. Gold has broken out. This is the very definition of a breakout. Well, not the complete definition, because typically for my definition of breakout, you need positive financial news, but we have the share price breaking out above a resistance zone on strength. 5 big up days in a row. Well, actually, you could say 6 big up days in a row. Okay, gold has broken out. Okay, so good day in the markets today, and more than likely my portfolios have risen quite well today. I'll have a look at that later when I stop recording this video. No, I won't do it now. I won't do it now. I won't do it now. Okay, I was just about to do it. So I have a look at top gainers, top losers, and sometimes when I don't forget, I'll just open up these, and they also have in market index unusual volume. I like this scan because one of the things I am looking for is unusual volume. I like to see high volume coming in. That's a really good signal. So they define unusual volume as 50% above the average daily volume for the last month. So I'll talk about this in a second. But before we do that, let's have a look at the top losers for the day. Yes, let's have a look at the top losers. So what I'm looking for here is I'll go through by percentage change and by market cap, and I'm ignoring whenever there's a large percentage change on low turnover. So for instance, 8VI Holdings, I'm pretty sure 8VI Holdings, I could be mistaken, they're doing investing education in Singapore, something like that. Turnover of $833, share price down 28.6%. Completely ignore that. So what I'm looking for here is high turnover, and you can see it right here. So the worst performing company away from the low turnover companies is Droneshield. So to be expected, down 14.4% on pretty big turnover. And then we have Helia Group down 13.8% on pretty big turnover as well. Any other companies here? Nothing there. So let's look at market cap. So I'm going to have a look at Helia Group. Why did Helia Group share price drop 13.8% today? Some of these other companies I don't care about. Restaurant Brands, low volume. New Zealand Me, low volume. Everything else is low volume here, or not significant. So the only two interesting companies here are Droneshield and Helia Group. So let's have a look at Droneshield and Helia Group. What happened with both these companies? We're in no Droneshield. Looks like some of the directors sold out. When did we get these announcements? So it was afternoon, 6:11 p.m. yesterday. I'm going to open up one of these. I'm assuming they're all the same. 3 different directors selling out. First thing I look at is where they sell, nature of change, on-market trade. The sale of shares represents 46.3% of the total directors' holding on a fully diluted basis. A substantive reason for the sale is to realize liquidity on some of his holdings following a number of years of being involved with the company. Is that for taxes reason, or is just selling because the share price has increased a lot and he wants to buy a yacht? I don't know. Okay. All right, so this could be concerning. We have 3 directors selling to realize profits. It's not necessarily a bad sign. Let's have a look at the chart. The chart's going to look ugly, I can tell you that much. A lot of volatility in the share price of this company. Massive volume coming in. Share price rose to 92 cents on the back of the company's half-year results, and share price has fallen away. If the share price has decreased by cents by about 35 to 40%, this could be a time to think about buying some Droneshield shares. Is the market panicking, or is this a bad sign moving forward for Droneshield? I don't know. Share price is in a support zone, which is the shorter term moving average zone, but sentiment in this company has shifted dramatically in the past few weeks from highly positive to negative. So I'm not sure right now. So I'm very thankful I took profits in Droneshield. So I was trading this company, bought way down here, sold some shares up here, but I did buy back in and put those shares into my small cap portfolio. And I, at this point in time, won't be selling my shares in Droneshield just yet. The other company was, what was it? Helia, HLI. The other thing I should mention is we are in dividend or ex-dividend month. So a lot of companies are going ex-dividend. We saw that with the Accent Group and Shaver Shop yesterday. But the share price of Healy Group dropping 14%. This company would have a really high dividend yield to be dropping that amount. So it's either easy to know if a company went ex-dividend is just have a look at the dividend in ComSec. Here we are. Ex-dividend, 7th of March. Dividend of 45 cents. Share price dropped 59 cents. Dividend yield 6.8%. This is a pretty big dividend. 50. So the last two dividends, interim and final, 59 cents. This company has a dividend yield of over 10%. Don't know why it says 6.8% here. It's a dividend yield of over 10%. Okay, let's have a look at the chart. So what I'm doing here is I'm looking for opportunities. I'm looking for breakouts. This is not going to be a breakout, but is the market panicking? Because I do remember Helia Group in a really nice uptrend. That uptrend came to an end well before the company went ex-dividend. I'm not sure why. Typically, when a company has a really good dividend, the share price rallies just before the company goes ex-dividend. Now, the company's share price did drop when they released their results, it looks like 10% on the 28th of February. So this chart has gone from being positive, nice positive uptrend, good uptrend, to being a little bit more negative. Now, sometimes in TradingView, when you do hit this ADJ, adjust data for dividends, it will adjust the chart for dividends. Not quite. The share price should have jumped up 40 cents. Okay, so maybe it hasn't adjusted it just yet. So a fairly boring day on the ASX in terms of losers. Not much happening there. Droneshield and Helia, which is a company that went ex-dividend, I ignore those companies because there's a reason why the share price dropped 13.8% because it went ex-dividend. Now to the top gainers. Best performing company on the ASX today is Australian Bond Exchange, up 171.43%. But look at the turnover. I was going to say something happened to that company, but turnover was $12,000 worth of shares. Okay, I want to just itchy nose summary. Ew. There's one seller at 10 cents. Quite a few buyers. Course of sales today. Oh, someone sold on the opening auction at 1.6 cents. Or someone also bought on the opening auction. Imagine you bought on the opening auction. It was not many shares, only 592 dollars worth. But if you bought on open, the value of those shares now is over $1,000. You've done well. That's a nice little trade. Although you probably wouldn't be trading this company because you see, with one trade, the shares increased from 1.7 cents to 3 cents. This company released no announcements today. I can tell you that much. Yeah, they were in suspension because they released a half-year report late and they reinstated on the 4th. So this movement, no idea, but not high volume. So this company won't get a price and volume query. They might get a price query, but not a price and volume query because the volume is not that high. If you look at the trade history of this company, the other thing is the share price dropped over 10% in 3 consecutive days. So that's probably another reason why the share price rallied. The share price, let's have a look at the chart in ComSec. Share price in a well-defined downtrend, and this was just a little bit of a bounce. Nothing to get excited with when it comes to Australian Bond Exchange. Now, the next company maybe it is time to get excited. Is that the only company to get excited today? I think so. Appen, I'll talk about Appen maybe later, up 20% today. That's interesting. So I might forget about Appen. Um, the share price of that company is in a pretty significant rally. By market cap, Zip, I'll talk about Zip later in the video as well. So Mesoblast, no, I'm pretty sure Mesoblast didn't release anything today. 29 metals. So 29 metals, Appen are sort of like playthings for day traders, I think, right now. Fair bit of volatility. So hopefully I'll talk about Appen later in the video, just like Zip. So it seems like the only company I really want to talk about in today's video in terms of top gainers was Immuron. So I did a video on Immuron a few months ago because it was a company I knew nothing about. And the only thing I know about Immuron is they sell a product called Travalan, which helps with travelers' diarrhea. And the company has a burgeoning relationship with the Department of Defense in America. And the company did release an announcement today. That's one thing I do remember in regards to Immuron. So let's have a look at the announcement they released today. And to be honest with you, the announcement wasn't that interesting. Okay, why in ComSec does it say the share price is 13 cents? But if you look in market index, it says the share price is 12.5 cents. So why is there a discrepancy? Let's have a look. So it seems like market index, or is this updated? Let's have a look, update this. No, so it seems like market index is taking the share price at close, not including. Oh, no. The closing auction, yeah. During the closing auction, the share price was 2.5 cents. And then 8 seconds after closing auction, there were some more shares traded via CXA, which is Chi-X. And that's why there is a difference between ASX here, because they include the Chi-X, and market index does not include the Chi-X trades at 13 cents. And that's why there's a discrepancy between. So that did have me perplexed for a second there, why there was a difference. And typically usually the difference is because there are Chi-X's trades that sometimes aren't acknowledged by some platforms. ComSec does acknowledge those trades. Seems like market index did not or does not acknowledge those trades. Anyway, back to Immuron. They released an announcement at 10:03 a.m. In fact, I did see this announcement. So sometimes I don't go away from the computer right when training begins. I go away about 10 a.m. because I just want to see how training has begun for the day. And at 10:03 a.m., Immuron released an announcement called Travalan to progress to phase 3 clinical trials in the US. I saw the title of this announcement. I went, oh, that's not that interesting. Obviously, I got it wrong because the market loved it. I didn't even open up the announcement. I just saw the title and that's not that exciting. The only type of announcement that gets me excited is when there's any financial numbers. This is just a phase 3 announcement, well, a progressing to phase 3 announcement. But the market loved it. Market loved it, and I am wrong. And let's have a look at the chart for Immuron. Is this a breakout? This is not my preferred breakout. I prefer breakouts on positive financial news. But I was going to say this will be a breakout, and it is a breakout. A little bit of selling during the day. Share price got to a high of 14.5 cents. And I would say there's going to be massive volume coming through the day. Now, the share price of this company has been a long-term downtrend. The downtrend has been in play for about 3 years, I'd say. Downtrend has been in play for about 3 years. Now, if you go back to 2020, there was a little hype period in this company. I still actually do remember this now, just by looking at the chart. I forgot about this company, but now memories are flooding back. I do remember these 2 days. Share price for Immuron on the 10th of June rallied 261%, and then on the 21st of July rallied 250%. Now, one of the reasons why the share price might have rallied is simply because there was a lot of froth in the market back then. Remember, after COVID-19 and into 2021, the market was insane and a lot of trading, a lot of day trading was happening, and maybe this was one of the reasons. And these announcements that were released on these days, and more than likely there were positive announcement released on these days were not that positive. The reason why I say that is there were no strength to the movement of these days. It was just a day trader play thing. You didn't see any stabilization of the share price or anything like that. In fact, the day after the 21st of July, share price dropped on the 22nd of July, share price dropped 34%. So what we want to see now is a share price not drop significantly tomorrow. So I will put Immuron into my daily watch list. So this is a watch list, a group of companies that I will look at every single day. And I want to focus on, also have a list here, a piece of paper I put in front of my computer so I don't forget to look at these companies. I'm going to put Immuron. I probably shouldn't put Immuron because I'm not going to trade it. I just want to see what happens with the share price tomorrow. If there's a lot of selling, that would be negative. Okay, so that's top gainers, unusual volume. So this is, again, looking at unusual volume today. So BFL. And what I'm looking for here is unusual volume and high increase or decrease in share price. So one of the reasons why I don't sometimes look at this is because I've already seen these companies in the top gainers and top losers, but I'm looking at something like Southern Cross Electrical Engineering, up 7% on high volume. I actually should do this by change. So Immuron, yeah, we already know that. S2R, maybe that's a company to look at. Appen, I'll talk about Appen in a second. And nothing else I want to look at just there. Zips down there below. And on the flip side, we've already talked about Droneshield and Helia. So sometimes you do get an overlap of companies. So I don't necessarily need to look at this particular scan, but sometimes I will look at this scan. Okay, so we've gone through the interesting happenings on the market today. So let's have a look at the chart. And if you don't want me to look at too many charts or so many charts, leave a comment in this particular video and maybe I will decrease the amount of time I'll spend on charts, because I do want to have a look at some charts right now. And the first chart I want to look at is Zip. Actually, no. Dicker Data. Okay, so I'll talk about my trade with Dicker Data. So if you like me to talk about more about trades, what I'm trading, again, leave that in the comment section of this video. So I did buy Dicker Data on open this morning at $10. In fact, I'm going to put it in here at $10.88. Well, I've got there we go. On open. I decided that yesterday I was going to buy on open. The wrong day. And my hope is that the share price will rally in the next 2 weeks. So my trading plan with Dicker Data, here it is. I have given this company 2 weeks. If the share price doesn't rally 10% in 2 weeks, I will sell out of this position. If the share price rallies by more than 10% in the next 2 weeks, I will take profits. So either, well, without doubt, I will not be trading Dicker Data in another 2 weeks because I would have sold out of my position either at a 10% or greater profit, or the share price does not run. I think the share price will run because I've seen this time and time again when directors sell out, initial panic, and then the share price rebounds fairly quickly. Doesn't mean it always happens, but that's the general pattern I do see. And sometimes it's all about pattern recognition. So that's my trading plan with Dicker Data over the next 2 weeks. So what I'm going to do now is I'm going to go through some of the trades I have right now in my technical analysis portfolio. But before I do that, let's have a look at Appen. Appen is running hard right now. So the share price of Appen has increased from 26 cents to 75 cents in less than a month, about a month, we'll say. So share price of this company has tripled in about, I think this is a plaything of day traders right now. Not only this company, 29 Metals. The reason I say that is I'm a member of a few trading groups, and Appen and 29 Metals are mentioned quite a few times. And the reason I'm saying that is day traders love volatility. And right now, Appen and 29 Metals are quite volatile. Now, let's have a look at the 5-minute chart. So if I was trading this, and I'm not, I should say, if I was day trading this, I'd probably be looking at a 5-minute chart or a 1-minute chart. So maybe a 15-minute chart. 15-minute chart looks pretty bullish. It all depends on your time frames. So even the 5-minute chart looks pretty bullish. Yeah, it looks pretty good. So this goes all the way back. So the share price of this company, yeah, it's broken out. Also look at volume. It's really hard to see volume here, so we'll just zoom in a little bit. So massive volume coming in at the start of trading today. Huge volume coming in, and that's going to be day traders. And the share price took off. No reason to sell out of your trading position in this company right now. You can see share price consolidating. This is another thing to look for. Share price consolidating from the 28th of February all the way through to the 6th of March. See share price going sideways. That's a good sign. And then a explosion of volume towards the end of trading on, well, actually, I could say probably the beginning of trading on the 6th of March. So we saw the share price starting to rally yesterday on the 6th of March, and that rally continued today. I would be holding my position right now at about 75 cents. This would have been a good trade. If I was day trading this, I definitely could see maybe I should do more day trading because there was a definite signal about a month ago. So if we go back to the daily chart, so I do my trading based off the daily chart. This is not a breakout. Some good volume coming in, but we've seen really big volume over the past month or 2 months or so. But eventually the day traders will become tired of this. They want to take profits, and we'll be surprised to see the share price take a little bit of a plunge. Now, the company did release the results also, so maybe there's a bit of excitement on the back of the results. I don't know why, because the results would not be that different from the last negative trading update the company released on the 22nd of January. So this is, I'm going to put this into my daily watch list. Okay, not trading Appen. I'm more focused on those companies that have the potential to run for a longer period of time. That's what I'm focused on. Maybe I can do more day trading in the future if I find, and maybe it's just 5-minute charts, 15-minute charts, that I find something to be comfortable with. The thing that I don't like about day trading is you have to focus on the charts all through the day. And I don't like that. I like to spend my time away from the charts during trading. And that's why I don't like day trading. So let's have a look at some of my trades that I do like, starting with Hub 24. This is the sort of thing I like to trade. So I bought at $32.05. Now the share price broke out in August last year. So share price is now up 25% from my bought. So 25% in 6 months. I like that. That's the sort of returns I'll be happy with. And the share price of this company is a well-defined uptrend. No reason to sell my position right now. And preferably, I'd like to see the trend continue for the next 6 months. So that means I'm holding this company for more than 1 year. That's my preference, to be holding these trades for over 1 year to decrease my taxes. But if I see the trend come under pressure, I will sell out of this position because I am not going to make any decisions based off taxes. I've learned my lesson the hard way with that in the past. Reviewer is another one. This is a beautiful looking chart. We had a little bit of a dip after they released their results, but the share price has continued to take off. Massive volume coming in. Look at that volume, beautiful volume. So no reason to sell this position just yet, even though I am up over 50%. You can see I made a mistake here. No, I won't talk about that. I've already talked about that. Elders is another hopefully long-term position. This company's in a beautiful uptrend. Bought at 740 after the 13th of November. Share price on that day rallied 18%. And there'll be some people out there say to you, well, you've missed the boat. When the share price rallies 20%, why buy? You've missed the boat. It's already priced in. Wrong. Here's an example. Megaport is another example. I bought a few days after that initial rise in share price. Would have been positive financial news. And the reason they are wrong is because there is new information. And it takes a while for the market to digest that new information. And then you get a rally in the share price. And then what happens? Swing traders, momentum traders see the trend in the share price of Elders has changed from negative to positive. Oh, let's buy some shares in this company. Fund managers might have to redo their models in regards to Elders. Might take them a month or so. They've redone their models. Now, Elders is a buy. It takes a while for the new information to be digested. So when you see a rally in the share price of 20% in one day, doesn't mean you've missed the boat. Don't listen to those people. And I'm thinking one person in particular, because this one person said it in a podcast about a month ago. You've missed your boat when the share price has rallied or fallen in one day. Wrong. I couldn't believe it when I heard that. Zip. Okay, I did mention I was going to talk about Zip. I have not been thinking about taking profits in Zip until today, until right now. In fact, I saw the chart for Zip because I saw the share price did rally a little bit, and I went, "Ooh, what does the chart look like?" I am much more willing to take profits right now in Zip. Now, I was thinking this yesterday because when you see this one-day candlestick, so yesterday it opened at $1.10. The high was $1.29, and it closed at $1.17. So the high on the day was much greater than the closing price, which means there was pressure on the share price. There was supply of shares on the market, and there was enough demand to meet those supply. So I wouldn't have been surprised to see a little bit of selling continuing today. We didn't see that. In fact, the share price popped up on opened at $1.24. It rose to a high of $1.33 and closed at $1.26. So more selling today. So even though that sort of was maybe a little bit of a wary signal that there was a a shadow above the main body, there was an extra supply of shares on the market. There was enough demand to meet that supply today. But it's just a run up in share price. The share price of this company has increased probably 25% in the week, 24.75% in the week. And so from the start of Monday, and it rose 16% last week. So it's risen a fair bit in the last 2 weeks. So maybe I should take my profit. So I bought shares at 55 cents in December, and I could double my money by realizing my profits tomorrow. And that's pretty good for 2 months. 2 months. I don't know. Another company I was thinking of realizing profits today was email payments, and this is really interesting. So we saw a massive decrease in share price in November last year, 30% drop, and that's because there was no mention of them selling the PCSIL, and then they mentioned they were selling or realizing the loss in PCSIL. They're going to finish that business completely, not selling it. Share price rallied on that day. I believe it was the 18th of January, I could be wrong, by 22% on that day. And the share price rallied up to $1, and then it fell away. Share price rallied back up to $1, then fell away. Share price rallied back up to $1, and then fell away. In fact, you'll be able to see this when we look at the 15-minute chart. So there's an obvious, so obvious resistance level around about $1.04. And you can see that just by looking at the 15-minute chart. It's so obvious that it makes it silly that I'm talking about it with email payments. So it started all the way back in January, middle of January, when just after they released that positive news on the 18th of January, share price rallied the next day to $1.04, and then it fell away. Share price then fell away to 80 cents. So in fact, what I should do is put a line right there, and that will become clear in a second. And so the share price fell from $1.04 all the way to 80 cents. Some big volume came through just before the share price reached its low. That's another thing. Look at the volume. Big increase in volume just before the share price hit its low at 80 cents. And then the share price rallied from 80 cents all the way back up to $1.02. Not quite $1.04, but $1.02. And then what happened? Selling came in. Not big volume, but selling came in. And the share price took a tumble. Share price fell from $1.02 all the way back to $1, all the way back to 80 cents. Look at that. Perfection. I think I might even mention this, that, share price fell to 80 cents and massive volume coming in when the share price fell to 80 cents. And then the share price rallied from 80 cents all the way back to $1.04. And then share price hit $1.04 and the share price pulled back. But what happened with the most recent pullback? It was much weaker. Share price didn't pull back all the way to 80 cents. It only pulled back to 91 cents. And then the share price rallied again. Share price rallied back up to $1.04 today. And we saw a little bit of selling in the last, maybe the close of auction. and the share price closed at $1. A possible sell signal, but the only thing holding me back is the most recent pullback was really weak, and we haven't seen much selling today. In fact, pretty big buying coming in and open today. So big volume coming in at 9:30 a.m., which actually pushed the share price above $1. So I was thinking of just, excuse me, I was thinking of just realizing my profit because I bought at 80 cents. Why did I buy at 80 cents? Well, I've talked about 80 cents a few times now. 80 cents has been a really important level for this company going all the way back to April of last year. April of last year. That's why I bought initially at 80 cents. So I was thinking maybe of selling at $1 and taking my 25% profit. And maybe actually, because I do have email payment shares in my small cap portfolio, and taking the profits I make in this trade and putting those profits into my small cap portfolio. So just realizing my profit and building up my other portfolio or the amount of shares in that portfolio, if that makes sense. So I'll just say that again. So I have, say, 1,000 shares. I'm not sure how many shares I have in my small cap portfolio. Say I'm trading 1,000 shares. And if it's up 25%, what I'll do is I'll sell 750 shares to realize profits and put those other 250 shares into my small cap portfolio to raise the amount of shares in that portfolio from 1,000 to 1,250, if that makes sense. I'm thinking of doing that sort of thing with companies that are in my quality portfolio. Maybe not my small cap portfolio, but definitely when I'm trading companies in my quality portfolio, just building up the amount of shares I have in those quality companies. Hopefully that makes sense. Other companies I want to talk about, Polynovo is interesting. I read an article today that for some fund manager, this is their favorite company of the year, Polynovo, and maybe they're traders because this chart looks absolutely stunning right now. Electro-optic system, another stunning looking chart. No reason to sell this company just yet. We had a beautiful rise on the 28th of February, up 17.5%. And then the share price went sideways, not a lot of selling. And another nice rise today. Savastream, another beautiful chart. I want to take my profits in this company. I bought at 81 cents. And it is now up over 50%. But just look at the chart. Why would you sell on this chart? Look at the volume, massive volume, and the share price just keeps on rising every single day. So why do I look at volume? So when you see massive volume like this, what's happening is fund managers are becoming excited in a company. They're either adding to their position or they're buying into a new position in this company. And fund managers are ultimately who you want to follow when they're really eager on buying into a company, because they're the ones who are really going to drive the share price higher in a company. So look at the volume, particularly in the companies like this, because it's fund managers who are going to drive the revaluation of a company. Any other companies here? I'm thinking of looking at the half-year results for Duratec and selling out of my trading position in Duratec, and either completely selling out of my position or taking a medium to long-term position and putting it into my small cap portfolio. And my decision will be based off based off the half-year results, because I was shocked that the market did not like the half-year results. And we know they didn't like the half results because the share price tumbled 16% on the day. On first inspection, they look pretty good. Anything else here? Oh, Megaport. Okay. Rant of the day. Sort of the second rant of this. I bought Megaport at $12.05 on the 30th of January. That wasn't their half-year results. That was their quarterly results. Share price on that day rose 27.6%. So just before this happened, I listened to this podcast, and this person said, "Oh, no. You want to be holding the company for the long term, because when the share price runs like 27%, they didn't say 27%, they said 20%, you missed the boat. The market's already priced in all the news. You're not going to see, you missed it. You're too late. You have to be holding the company before they release that news." Ridiculous. Here is the proof on why that sort of thinking is ridiculous. So I bought at $12.05. So I bought during trading on this day. And the reason I bought is that 1 day candlestick is really bullish. When the share price closes near the high of the day. And during trading, I just knew share price of Megaport was going to close near the high of the day. So I was sort of anticipating, and I bought before trading had finished at $12.05. And it didn't break through the resistance level, which was $12.50, but I was expecting it. And this is important. So pattern recognition, just knowing that eventually the 1250 barrier would be broken. So the share price on this day rose 27.6%. So according to this one expert, and according to many investors out there, why would you buy shares in this company when it's risen 27%? You've missed the boat. But again, this is based off new information. And this new information was driving the share price higher. It's just like satire and the AFR's assertion that you have to be skeptical when the share price of a company rises a lot. No, you don't. There's a reason behind it. And there's a reason behind why Megaport share price is on a run right now, and it's a beautiful uptrend. It's because the company has released two really good reports in a row, the core report and the half-year report. And that's why the share price is in a beautiful uptrend. And I bought at $12.05. Share price now at $15.22, which means share price is up 25% from when I bought. There you go. You haven't missed the boat at all. Anything else? And that's it today. You'll notice I have Q Energy here. I bought some Q Energy shares. Oh, and I bought IRI. I'll talk about integrated research tomorrow. And that's all I've got for today's video. If you have any questions, any thoughts, leave those in the comment section of the video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.